And we're live.
Hello everyone and welcome back to OAG's latest webinar. We're going to be talking today about the rise of the superconnectors. So welcome back to our regular audience and welcome to those of you who've joined today to hear what we've got to say about this exciting subject. So to do justice to this, I'm joined as ever by John Grant, OAG's Chief Analyst. Welcome back, John. We've had a slight break, haven't we, for a month or so? Doesn't really feel like it from our perspective.
Yes, it seems like it. 7 weeks without a webinar. It's almost like a detox session, isn't it? So good to be back and lots happening, of course.
Something like that. We're also joined, delighted to be joined today by Andrew Ward, who is coming to us live from the Middle East, not far from DWC. Good morning, Andrew.
Literally over there, DWC. So if you go out there and turn left is the new site or the existing site for DWC, but where the expansion will be going on as well.
Brilliant. Andrew's a Middle East-based aviation consultant who's focused on hub strategy, infrastructure development, traffic forecasting, and PPP-backed delivery, and I'm sure a whole raft of other things. So well placed, I think, to help us navigate this topic. So thank you, Andrew. We look forward to getting into the discussion this morning.
Great.
And for those of you who don't know me, my name's Deirdre Fulton. I'm a partner at Midas Aviation. I've been hosting these OAG webinars for some time now. So let's jump into the topic today. So really what we wanted to take a look at was obviously there's been the development of some very large airports across the Middle East and Turkey. And we wanted to look really at their impact on connectivity and explore how they've grown and to what extent they're kind of poised to continue to grow over the coming years. So we'll have a look at the infrastructure that supports growth, how the development of the airlines at each of these locations have kind of changed connectivity. And then dive in a bit into some looking to the future about what might happen. As ever, please feel free to drop your questions in the chat and we'll do our best to come to those. So before we get into the detail, we always like to give you a little bit of a snapshot view of what's happening in terms of the global capacity picture. So those of you who've been here before will be familiar with this chart that we're showing, which basically tracks global capacity by month for the last few years. So we've got 2019 as a baseline black line, we've got 2024 and then yellow for the current year. And you can see that been a fairly steady position through 2025 year-on-year growth, and we're projecting forward for the rest of the year that's going to continue, but down a little. We saw over the summer months, and we're kind of resolutely now in the UK saying summer is over. The weather and the presence of jumpers is telling us that. But in the summer, we saw 3.1% year-on-year growth, slowed down a little now for the year to date to 2.9%. And I think, John, we're kind of expecting to see that really, aren't we, for the rest of this year?
I think so. It's almost like the ripple effect from some of the early signs we've seen in the US domestic market just before the peak summer period and warnings that demand was softening. I think that's running through into other markets around the world now. The economic slowdown, geopolitical events, consumer confidence, disposable income, interest rates remaining higher than people expected, has made airlines cautious about this winter. And, you know, we're seeing mixed sentiments and statements. Delta saying that July and August US originating international leisure traffic on transatlantic routes was weaker than they had anticipated. Well, I don't know why they say weaker than anticipated, because if they don't know what they're carrying, no one else would. So, you've got that. You've got Jet2 in the United Kingdom, a very large low-cost carrier, scaling back a little bit of capacity. Then, of course, you've got Ryanair and others. So it's a really interesting time, because we finally seem to have got some of the supply chain issues under control. Boeing are very keen to start producing 45 aircraft a month as soon as possible. The FAA says, hang on a second, let's make sure your quality standards are fine. But, we've got some of the other challenges that are just beginning to ease. A bit more assurance about aircraft delivery dates for some carriers. But the market certainly is softening, and airlines are being a little bit cautious going into the winter, which makes great sense for them.
Absolutely, it's the toughest operating season, isn't it? For sure. And I guess what we know about this industry is that there's always going to be a headwind from somewhere. Okay, let's look a little bit deeper into just that domestic and international picture. So what we're showing here on the left is domestic capacity growth rate by summarized region. So we can sort of see there's a little bit of divergence there between the regions. So, North America, steady 1.2% growth, which to be honest, domestic capacity growth in North America kind of ranges between 1% to 2%, doesn't it?
It
Sometimes
does.
2.5%.
And I think it's an extremely mature market. And one of the struggles that the ultra low cost carriers are having, quite frankly, and it's, if you look at capacity, which is also a proxy for demand, then the US domestic market is saturated, and there's not much more you can do to stimulate it. I think the Middle East is interesting, because you label it the Middle East, you might as well just label it Saudi Arabia, because that's essentially what it is. And that's been very strong with FlyNAS, Flydeel, and Saudia, all adding domestic capacity. And of course, we're still eagerly awaiting with bated breath the arrival of the first ever Riyadh aircraft. But they've got to load their schedules first. In Europe, it's just, the pressure of taxation, environmental lobby groups, that's creating that challenge there. But the one that I think is optimistic is Africa. Suddenly we're beginning to see some domestic growth there. That's good.
Yeah, that is good. I think that's partly some recovery in South Africa, isn't it?
Yeah,
kind of continuing. So that's a positive.
And then you look at the international markets, which are in the top right hand side there. I mean, Asia Pacific continues to grow and grow and grow, and it's all, some of it is still China, but there are other growth markets reappearing again, which is positive.
Yeah, it's to some extent still recovery though. The bottom chart is the capacity position for the year to date against 19. No apologies for continuing to reference 2019, by the way, because I think actually that's part of the story, isn't it? So yes, on the face of it, strong growth, but actually if we split that down by region, international capacity in Northeast Asia is still 31% below 2019. So there is strong growth happening internationally, but it's just not quite enough yet to push that into above the 2019 level, for various reasons. So,
and I think if we look at Africa and Latin America, I think that's quite interesting, because a lot of that is born out of the low cost carrier segment. Africa, we tend to forget about places like Morocco, which are part of Africa. And it's been a phenomenal success story in the last couple of years with the growth of tourism, Ryanair basing aircraft there. You can fly from nearly every UK regional airport and French regional airport to Morocco now. And that's a year-round leisure destination. And then you look at Latin America, where the recovery has been really, really strong, rapid growth in the low-cost airlines, who've all had new deliveries in recent times. So it's a positive. It's been a really positive picture for most parts of the world this year. But now, at the moment of maximum positivity is the moment when airlines need to begin to think about how they're going to play the next couple of years, because we're beginning to enter a difficult period, I suspect.
Yeah. Okay. Let's focus in then now on what we said we were going to talk about today. So you've got this sort of situation, haven't you? And what we're showing here is just a visual to kind of highlight that if you center on the Middle East here, the lighter shaded part of the world here is within is the flying range from Dubai, just as an example, 4,500 miles, which, as you can see, covers pretty much most of Africa, Asia, Europe, and obviously there are aircraft that, in the fleets of the Middle East carriers that can fly further, but just a sort of visual representation, I think, is interesting. What we're also showing here is capacity growth rate for the top 10 global hubs by capacity. So I guess to some extent what we're doing here is looking at Dubai and Doha and Istanbul, who we're interested in today against their peers, certainly on the basis of size. And the Hong Kong story is wrapped up in COVID-19 recovery, new runway capacity. So it's a bit of an outlier in terms of the norm. But actually you can see Istanbul continues its strong growth. And actually Dubai is kind of fairly level pegging with most of the others. And you've got slower growth, obviously, Heathrow and Frankfurt. And Doha is just not, in capacity terms, certainly, not in expansion mode at the moment, is it really? That's something that we've been tracking this year to date. Capacity is just holding steady, really, isn't it?
And a lot of this has to do with where the base airline, who typically produces 50-60% of capacity, is in their network evolution. And that may be fleet deliveries, new aircraft. It might be, more effective use of those aircraft, increasing hours that they get off each aircraft, adding more destinations and frequencies. So I think Dubai, a lot of the story has been around, growth from Fly Dubai, new destinations being added rather than Emirates, and some more inbound stuff. Istanbul is nearly 100% about Turkish Airlines and their continual growth. Central Asian markets and Central Asian carriers operating to Istanbul, helping the story there. So I think it's everyone has their own unique situation at the moment. I mean, Andrew, from your perspective, does it feel like Dubai and Abu Dhabi are growing, or are they sort of in a holding position for this?
I was just going to say, sometimes it's the economics of walking around, isn't it? That you can look at the numbers and you can look at the graphs and you go, I understand that position. I'd question anyone to try and go and get a flight at a reasonable cost now from Dubai Airport on Emirates. I flew back from Milan 2 nights ago. The airport is absolutely saturated in those peak hours. Obviously, it's the peak hours. Absolutely saturated. Prices are really, really high now. Whether that can still be claimed as a rollover from COVID or not, let's see. But there's some really, really aggressive pricing going on. Abu Dhabi is the same. Abu Dhabi has its lovely, shiny new Sheikh Zayed terminal. And if anybody hasn't been through that, I really would recommend that you do. Because if you want to see what the Middle East can do, yes, we all know the history of Abu Dhabi, but my word, what they have delivered is phenomenal. But when you go there during the peak hour, you almost can't see the floor. I think you're absolutely right, though, now that I think the Middle East is in a really interesting point right now about where the airlines go to follow the economics, because obviously economics drives airlines, doesn't it? Middle East, Saudi is definitely refocusing, recalibrating, turning down, however you want to say it. There is less money around in Saudi Arabia. That doesn't mean that all of the mega projects are going to be stopped, but there's definitely going to be a refocus. Dubai is 400,000 people, I think, arrived in Dubai in the last set of statistics, whether that's half year or full year. But the economy is booming, but wage pressure and the amount of people here now is really curtailing salary growth. So then you start to get into the message of how much can actually people afford to travel. So my flight was 950 euros, so a return economy on Emirates. To what extent can you still continue to pay those flights to go back to Europe? Or is that now a once in a year, whereas it used to be? I've been in the region for 11 years, so the pre-Instagram generation, where a flight used to be £350, £400. You could even go back.
That's kind of a tangible, noticeable increase, that, isn't it? You know,
definitely not on the table now for that type of travel.
Well, that's good news for the expats who, you know, have to come home and see the mother-in-law over the weekend. That's no longer possible, is it? You've got a real excuse you can use for that one.
That's absolutely true. You are seeing the low-cost guys and the fly Dubai isn't low cost, but they're definitely making a dent in the market. You're definitely seeing this transition to those types of travel away from like the premium full-service carriers. Disappointing though about Abu Dhabi and what happened there, losing the low-cost carrier. That was, from everything that I hear, that with Wizz, it just didn't work operationally. Now, whether that's true or not, I don't know, but that definitely took out some capacity that was going into the kind of the more affordable market.
But, you know, I mean, the Wizz Air venture was more of an adventure than a venture in terms of going in without cast iron guarantees about access to the Indian subcontinent market, and the bilateral, if you look at the history between India and the UAE, was never going to be renegotiated given India's aspirations to create its own hubs. And then the operational issues and the talk about the engines and the dust and Pratt & Whitney, et cetera, you know, it was dusty in Abu Dhabi before Wizz Air arrived. So these sort of things should have been seen and realised before they got in the market. And then finally, of course, the nail in the coffin is Etihad get a bit more bullish. Their performance has improved. They've got a joint venture partnership arrangement with Abu Dhabi Air Arabia. And you end up being squeezed out. And for Wizz Air, who've had 1/3 of their fleet grounded this year at some point, it was a no-brainer to get out there. Why it wasn't a no-brainer not to go there in the first place is another.
I think it's a feature of any fast-growing market, though, isn't it? And that you know, everybody wants a piece of the action, and you see that, you know, if you look back in history at the evolution of airlines and air travel, there will always be success breeds success, you know, and I mean that in terms of somebody goes into a market, stimulates it, grows it, or there's growth happening, and everybody wants to come and join the party, and there will be failures, and that's just the reality.
It's a synchronicity of, you know, placing aircraft orders in good times, but you're not going to get those aircraft for 5 or 6 years. And this industry can flip like that. A geopolitical event, an economic event. Suddenly you're burdened with new aircraft just at the moment when the market turns. And you can't do anything about it.
And I think that's the interesting dynamic, though, isn't it? That as we sort of anticipate, and we'll come to some of this later, that the shift in the balance of growth is moving east, undoubtedly, from Europe, North America to Asia and beyond. And to what extent does the underlying growth potential that's coming from those markets that we already see in some places provide a degree of insulation against that? I think that's the exciting and the interesting thing. let me come back to the next slide in our deck, which is just a kind of a one-pager comparison for some of the airports in the region. So what we've got here is the big three, so Dubai, Istanbul, Doha, because we could just talk about the Middle East, but we think Istanbul's relevant in this conversation. And then for balance, we've included Abu Dhabi and Riyadh, just to kind of look at what are currently smaller airports, but you know what their trajectory is. So what we're showing here is just capacity as a sort of absolute measure, how many routes operate from the airport. So Istanbul top of that league with the Turkish airline network, which we can show you in a little while. Dubai's not very far behind, but considerably ahead of the others. We've also had a quick look at new routes that have been added in the last decade. Interestingly, quite a similar story. Obviously, only 2 of these hubs have got domestic markets, Istanbul and Riyadh. And then you were sort of mentioning this, John, the main carrier share of capacity. Now that can be an absolute advantage, can't it? You know, when you've got, for Istanbul, when you've got a carrier that serves the most destinations in the world, you've got a whole lot of insulation, haven't you, in terms of the strength of that carrier. But it can be risky too, because all your eggs are in the basket of that carrier.
Yeah.
Arguably, these airlines are way too big to ever fail, though, you know.
She says with fingers crossed. They are too big, they can't
fail.
They are. I mean, you know, that's not possible. But I think, it's, to Andrew's point, when you get these airlines who have such a dominant market share, and they begin to, because the market allows them and supply and demand allows them to begin to move their prices higher than has typically been the case, then the sensitivity of the market is such that it has an economic impact as well. You begin to see a little bit less travel on occasion, or less disposable income. You know, if someone decides they are going to fly, then they might not have money to spend on an evening out somewhere or in a restaurant or something like that, because they're making selective choices. So it's fascinating to see that at the moment. I think the really interesting thing is, you know, if you look, the main carrier share in Riyadh at the moment is presumably Saudia, who ultimately are going to relocate and refocus on Jeddah and are in transition. Then every one of those airports has multiple services to Riyadh at the moment, from a mix of legacy and low-cost services and airlines. So it's going to be very hard for Riyadh Air, as the new base operator, to command a significant position at that airport within the next 5 or 10 years, because the fleet growth just isn't there for them. It's going to take a long time to get to the aspirations that they've set for themselves, and it's not a short game that is being played.
I think in that graph there, Riyadh Air is Riyadh, and what will happen Riyadh Air is really the big question that changes all of this graph, or all of this graph, isn't it? And what do we actually see that's going to happen? Now, I said right at the top that Saudi Arabia is recalibrating from a financial perspective. It's in no way recalibrating from an ambition perspective. And again, I would go back to, we can talk about routes, and we can talk about metal, and we can talk about economics. You cannot underestimate the level of ambition that is in Saudi Arabia at the moment to transform itself. I stopped traveling there. I used to travel there a lot in 2018, before 2018, and then I was more Abu Dhabi based, and I started to go back a couple of years ago. I genuinely did not recognize the place. From a social perspective, from a political perspective, from a cultural perspective, it is, the level of change is phenomenal. And I think anyone who bets against Riyadh and Riyadh Air and what they can do over the long term is a very, very silly person. if you go back pre-COVID, Dubai, the Middle East was not in the position that it was in today. Events can change quickly, and things can move.
I mean, and it is the long-term play, isn't it? You know, I anecdotally remember the first Emirates flight arriving at London Gatwick, and we were in the airline offices that I worked for then, and we were looking out the window, just happened to be looking out the window, and as it arrived, someone said, "Oh, they'll never survive." And then 50 years later, you know, look at that giant that now exists. But it's about actually it was about cautious growth in the beginning. You know, it was pivoting on Dubai as a hub, Indian subcontinent to London. Then they went to Germany, and then they did some other things. And it's about cautious. It's a very controlled growth strategy you need, and it worked. And I think perhaps the risk for Riyadh Air is don't grow too quickly. I mean, you know, fortunately the CEO was at Etihad and inherited a bit of a mess there, where they grew too quickly. So I'm sure they've learned enough lessons from their previous occupations to overcome.
And I think as well about being around the region as well. So if you pop that chart back up again, so you've got Abu Dhabi, you've got Riyadh, and you've got Doha, which are all, let's not forget for the international audience, are fantastically wealthy, sovereign funds that dwarf lots of other countries. They have the capital to be able to make these things work. Now, that doesn't mean they're going to throw money at projects that, the level of maturity in the investment strategy over the last 10 years is unbelievable. They're not just going to throw money at vanity projects. That doesn't happen anymore. But where they can see opportunities and where it enhances the brand value of the country, this is really, really significant. So how that mix flows out. So Riyadh Air will come into the market and will, one way or another, will work. Doha and Dubai are not going to stand still, and we know what Dubai are going to do around DWC, and we know the DWC story, and we know how long it's taken, and we know that it's been announced, and et cetera, et cetera, et cetera. But Dubai as a brand value is not going to stand still. And then just up the road, you have Abu Dhabi, which is the largest sovereign wealth fund in the world, apart from Norway, I think it is. They have a brilliant new terminal, and they have Etihad, which has really transformed itself over the past kind of post-COVID period. Pre-COVID, Etihad could arguably be said to be becoming a high-quality point-to-point carrier. It has now really done some great work. How this mix flows out over the next, over the medium term, really, really interesting place to work and be involved in.
Absolutely. I think that competitive response, as much as I totally take on board your point about no vanity projects and a sort of sensible investment strategy. And we've definitely seen that emerging as the destinations in the region have matured and sort of worked out what it is they want to be. And you can see that really clearly in Abu Dhabi in terms of all of the development that's happening there. I think what is just going to be fascinating to observe is there isn't a sort of infinite flow of tourists to populate all of these destinations. There will be competition for tourism and for business and for events and for all the things that sort of go alongside that. And I think that's where the interesting dynamic is going to come in terms of what we see and how you balance the economics with somebody, and we've seen this in other markets, somebody will break enforced capacity discipline by dropping price or flooding the market with a raft of additional seats because they want to secure growth, because there's a whole ecosystem that needs volume of passengers to do that. And
but to Andrew's point, all of those four are not going to fail because they are so big and because they're status symbols and they're sovereign wealth funds, etc., etc. But it is the surrounding collateral damage that is going to occur that will be actually quite fundamental. Royal Jordanian Airlines, Syrian Arab Airlines, whoever it happens to be, those Oman Air, who've never made a profit, those airlines are maybe at serious threat from what's happening, because their cost bases cannot be reduced, and they're going to be on more and more pressure to deliver better product if they want to compete in the markets, and it's going to be really, really challenging for them. And someone like Royal Jordanian starting a was it 10 times weekly Dallas service next year? I mean, they could blow their brains out on that if they don't get connecting US traffic from America.
I think the collateral damage is definitely a question. I think if you compare, just going back to your point, Deirdre, if you compare kind of Doha to Riyadh right now, and you look at what Dubai did, so you've got a transit passenger, you've got one transit passenger. They are flying from east to west. They now have ample choices to where they go, right? So they now can go to Doha. Has all the infrastructure. If you go to Doha post World Cup, it is fantastic. It is finished, which is slightly unusual for the Middle East, that all the landscaping is done. When you drive and you go into Doha city, because of the World Cup, all the parks are done, all the gardens are done. There's no kind of random desert. It's all done. So as a transit passenger, there is a fantastic experience that you can have in Doha. You can stay in some of the best hotels in the world for literally $200, and I've done so many times. However, the airline strategy is to move that passenger through Doha within 2 hours. So where does the balance start to fall out? That the country of which the country is designed, the airport in the country is designed to support the airline, we know, or the airport is designed to support the airline, we know that. But you've now got this kind of tension going that Qatar Tourism, they want that passenger to stay, because they've seen what's happened in Dubai when you used to be able, again, going back pre-COVID.
Stopovers in Dubai.
You used to do the stopover, and now you don't do that anymore, because you don't need to, because people are flocking here in their hundreds. Doha is looking at that and going, right, well, how do I replicate that? But that's directly competing with the airline strategy. Do I bring in a low-cost carrier? How do I incentivize? Then you have Riyadh on the other side that's going, right, well, I know I have all the religious tourism that's going into Jeddah, but maybe I can bring them into Riyadh first and then fly them on, depending on how it works. But I'm going to build an entire city around the airport. KSIA is not an airport. KSIA is an entire real estate play. Now, whether they get to the 5 runways and whether they get to the however many hectares, that's debatable.
I think it doesn't matter, does it?
It doesn't matter. They've seen it work in Dubai. They've seen it work in Abu Dhabi next to Yas Island. If you go to Yas Island now, it's a brilliant place to live and work and play effectively at Yas Island. And you can see that the money that they're putting into it to promote it. That's the thing with the superconnectors here. They are part of a bigger picture. And looking at them purely through an aviation lens, I think slightly misses the point of what they are trying to do at the country perspective.
And I think that's the sort of the tension, isn't it? But between you put yourself on the map by pursuing the connecting market. And I can't tell you how many times I've been in Dubai and chatted to tourists who've maybe been to Europe. They're Australian. They've been to Europe for a month, and they're stopping over for 3 days in Dubai on the way back, and so or a week, and so there's I think the reality is you have to pursue all of those types of markets, don't you? You have to pursue the short haul point to point. You have to pursue connecting. You have to pursue everything, and the competitive environment in the region is only going to exacerbate that. Let me show. We've got a load of data on the slide deck, and
I've just rambled on.
No. But that's the reality of the situation, isn't it? That, and we can always anyone who is listening in, you'll get the slide deck later, so you'll get to dig into to sort of the numbers if you want to. I think this is interesting. So we pulled just kind of pursuing that direct versus connecting angle. We pulled the composition of traffic on that basis, so direct versus connecting for these airports for the 12 months to June 25. And you can see it's almost sort of exactly what we're talking about. You know, there's Doha with its 74% connecting people very efficiently transiting through the airport, but not dwelling in the city, against Dubai, which is now more people are starting or ending their journey in Dubai than connecting. And I guess, you know, for the others, it's sort of like, do you want to replicate that model? Do you want to have more of a balance? And you can see, we just took a look back 10 years to see how those percentages have changed. So you can see Doha really, that has amplified in the last 10 years. Same for Istanbul, significant change. But actually, Abu Dhabi and Dubai are reflective of more people are staying. More people are staying there for.
Yeah, it's an interesting slide because, you know, ultimately, what is a perfect scenario? Is it 50-50? And maybe it is, maybe it isn't. And Dubai's probably just about got it right now because it's taken a long time to get that direct proportion up to that number. I guess the things that there are two stark and worrying numbers there. The first is Doha. 74% of their traffic is at risk. Every day of the week, 74% of their traffic is at risk, either to price, a products initiative, or something else happening. In Riyadh, 18% of their traffic at the moment is connecting. If you break that down between how much of it is international to international and domestic to international, most of it is domestic connecting traffic, not international to international. And the yields on international to international, you know, they're not always wonderful, but it's great for cash flow if you can build that traffic. So one of them, to Andrew's point about Riyadh's made phenomenal progress in the last couple of years, and it's going to be hosting world routes next year. So all of the world's airlines and airports will be in Riyadh. But the point is, from a public perspective, if you have a straight choice between connecting in Dubai, Doha, Riyadh, or Istanbul, what is a consumer's current perception of a connection in Riyadh?
Yeah, I think that's a very fair point.
And that's the reality, isn't it? That this is a journey for Riyadh in particular and Riyadh Air to tell the world what the product is and what the market is and what the opportunity is. And I think it's interesting what Andrew's saying in terms of don't underestimate the ambition. And you see that, across all of the different strands of activity and things that are happening. So I think it is watch this space. It would be really interesting to, is 12 months enough time to come back and look at this again? Is it 24 months, 2 years, 3 years? Really to see a significant shift.
And what strategies do they pursue in the future? Because there is a way, but it would be a very reckless way for Etihad to try and aspire to create a network like Emirates. You know, that would be just chasing something that would be profitless growth.
You mean Riyadh, not Etihad?
No, well, Etihad and Riyadh. You know, I mean, both of them are in the same boat. You know, Etihad is an operation and it's profitable and it's done well recently, but it's not of the scale of a Emirates and it's not of the scale of a Turkish Airlines. And is the ambition at Zayed Airport to? But does it need to be?
Does it need to be with all of the development that's happening in Abu Dhabi? I think that's putting Abu Dhabi on the map as a destination in itself, and Etihad is well placed to be the carrier to serve that.
Which means it will be more niche, and you know, it will not be as it will have the breadth of network, undoubtedly, but it will not have the frequency of network, perhaps. So
is big always better?
Well, no, it's not. Certainly not.
I think there's a couple of things to talk about here. Is that one, never underestimate the power of the network. I fly through DXB because I've got DXB that's about 40 minutes that way, and I've got Zayed terminal, which is about 50 minutes that way. So I could pick either one of the two. Pricing for the major routes is probably about the same, but the network that Emirates provides is unbelievable. Pretty much I can fly more or less anywhere in the world that I would reasonably want to go 2 or 3 times a day, 7 days a week, more or less. And nowhere else in the region competes with that scale. So even like colleagues coming over from Barcelona, they're having to connect through here and there, connect through Rome or connect through Dubai. The level of network that it provides, and that drives my footfall. That drives the footfall into the airport. Because remember, the airport's customer is the airlines. And if the airline is also part of your group, then that makes life somewhat easier. In terms of what they do next, I think the whole thinking around the low cost, or even not the low cost, but the complementary airline is going to be really interesting to see what happens here. So obviously with Emirates and Fly Dubai, they have they cooperate. They don't compete on the routes. They only complement. So you can fly Emirates to Riyadh, and you can fly Dubai to Riyadh. They'll add in capacity. Whether the other airports or airlines replicate that, whether Etihad does that to be able to bring a lower cost of service, going back to our comment about the economics of the region, and what happens with Doha, because Doha is crying out for a cheaper way to fly to Doha from in and around the region to fill up all of this, this hotel capacity and real estate capacity that we have. But at the moment, it's more expensive to fly on a dollar per kilometer basis into Doha from here than it is to fly from London. What they do will be a really, really interesting thing to watch.
Yeah. Okay, back to the slide deck. So we just wanted to take a look at where are the biggest traffic flows. So what market are they chasing, accepting that is going to change over time. At the moment, and we saw on this slide that actually the focus at the moment of capacity for these airports is largely Asia Pacific and Europe. So 65 to 70% of capacity operates to destinations in those regions. And that flow, if you like, of traffic between Asia Pacific and Europe is the 4th biggest in the world. There are some other sort of flows that geographically, so obviously Asia Pacific to the Middle East, Africa to Europe, that these airports sort of sit in the right place for. But actually the very biggest markets in the world are, driven largely by big domestic markets, China, India, and North America. And we are going to see those grow over time.
Some of these flows, though, Deirdre, it just struck me looking at that when you see Africa, Europe, and the size of that market. And for a long time, I think it was about even 12-15% of the market between the United Kingdom and South Africa transited through Dubai, because the bilateral between the United Kingdom and South Africa was fixed. South African Airways couldn't get more access to Heathrow, so there was no capacity growth. So traffic was spilling. And it just strikes me, what would happen to the Middle East markets, and particularly Dubai and Doha, if their bilateral agreements with the Indians became open skies? That would materially change those networks and those flows of traffic, because at the moment, it's limited, and it hasn't changed for probably a decade, and Emirates keep asking for it to be changed, and they're India's aspirations for Delhi and Mumbai and their own hubs. The Indians have protected them a bit from that potential stealing of sixth freedom traffic from the Indian market. Now, if that was ever opened up, that would change the dynamics completely.
I think you've also, we can't ignore a second airport opening in the wider Delhi metropolitan area, which will give more capacity to the Delhi system. Second airport in Mumbai, Navi Mumbai, all and a sort of carrier base that finally has stability and the ability to serve international markets in a way it never really has done before. I just saw the announcement of a direct India-Athens service with Indigo. So actually that landscape of people traveling from India or the Indian subcontinent to connect over the Middle East onto somewhere else is shifting. And I think we will see that change. I think the counter to that is there's a very, very big market between the Indian subcontinent and the Middle East for a whole host of other reasons. Migrant labour market now, first generation Indians and second generation Indians in the Middle East. So there's VFR traffic backwards and forwards. So, but yeah, I think that shift of being able to connect through an airport at home versus having to fly 4 or 5 hours west to do that is we're going to see change there, aren't we? For sure. I think I wanted to just look quickly at Asia Pacific Europe because it's the biggest market largely for these hubs. Interesting if we look at, so this is, and these figures are all the 12 months to June 2025, so the most recent traffic data. So 43% of the traffic flows between Asia and Asia Pacific and Europe are going through these airports. That's quite a significant change from 10 years ago when they had just over a third of the market, 34%. And you have seen this kind of steady increase, I guess, as we've seen capacity in terms of infrastructure be provided. Dubai obviously has the biggest share. It's got 15% of that traffic flow, but Doha has also seen a considerable increase. We were asked a question before the webinar about what's the corresponding change for some of the European hubs. And actually, this is almost it's two things really, isn't it? It's the direct result of there being greater connectivity from these hubs back into Europe. So the regular services that Turkish Airlines operate to points beyond Heathrow in the UK and across France and Germany too. Similarly, Emirates, significant connectivity into the regions and regional airports in Europe has resulted in the share that these airports have of those connecting flows falling by a third. That's pretty significant, isn't it?
Yeah, but
now, I know there's China in there as well, and all the other things that have happened, but I was quite taken aback by those numbers.
But does this not reflect changing strategies across the European legacy airlines?
Of course,
where their capacity growth is constrained because of their airport capacities, and the local markets have been growing, and we know that connecting traffic is typically lower yield than point to point, and therefore they have subtly switched to taking more and more local traffic at higher yields, which in turn leaves that available to be taken by the Middle East carriers. And we are as guilty as everyone. If we're traveling to Asia, the most important thing is price, and then the second thing is product. and for some of us.
What about points?
The next thing is points, exactly. So on that basis, we all go through Doha. But but more seriously, it's a cause and effect, isn't it? The European airlines, the long-haul legacy airlines, are essentially in a privileged position at the moment where they can be a bit more selective about the type of traffic that they want and when they want it. And that is allowing the other allowing the Middle East carriers to come in and take food that they previously carried themselves.
I think this is the visual representation of that, just in terms of just how connected, and it would have been too much to show you how this has changed over the last 10 years, but these are just based on current route networks at Dubai, Doha, and Istanbul. But you can sort of see their respective strengths, can't you, in terms of where they play, although this is the kind of all-encompassing 326 destinations. But you can see visually really the how those connecting flows have been facilitated, and how airlines are really enabling that kind of growth. And that's the landscape, I guess, that Riyadh are coming into, in terms of how is there a big enough market at home to sustain and support growth, or which space are they coming in to play in terms of which connecting flows are they going after? Time's going to tell, isn't it?
Well, let's not forget they will have a large domestic market that will help in some way, although there's going to be some pretty good low-cost carrier competition in Riyadh anyway, not just
I think that graph, if you just pop it back up again, though, I think those charts really bring the story all together about what it actually takes to produce those routes and the role that the superconnector plays within it. So you have to have the network. That's the primary thing. You have to that strong flag carrier, or if the airline is owned within the group, that's the first thing. The superconnector then has to service that. So where you are connecting, you have to be able to transition that passenger within the 2 hours. You need, just talking about Europe, you need the political, whether ambition is the right word, but you need the politics to be able to support the growth, to be able to say, yes, we can do this, and this is how we will do it. And then you need the money as well to be able to finance it all. And this is where I would continue to go back to Riyadh, that it has all of those things. And so I really think it will change. It will change the market. Now, it's the timescale that it takes to do that. But I think we really will see a significant shift over the next 10 years. I think the other thing that is useful on these charts as well is just remembering that there's two other massive superconnectors over to the right-hand side within Singapore and Malaysia, and that the superconnector market, you really even can't see it in it's a connector. You can't see it in a regional basis. All of these major players will be competing for that same passenger, and how that all shakes out, really, really interesting thing to watch.
I think one of the things Deirdre and I were talking about yesterday was, 5 years ago there was always talk about we can't wait for the 321 XLR because it's going to create hub bypasses and we're going to get more point-to-point services on thin routes. And yet, actually, the way it's being used at the moment, it's actually enhancing the power of the superconnector hubs, because those base carriers there are acquiring the aircraft and using it to do the third frequency on a long haul route where there has never been enough demand for a fully laden wide bodied aircraft. But suddenly, you've got a 321, you've got a bit of a premium cabin, and you put on a second daily Madrid-Boston or a Madrid-Washington because you've got the right aircraft for it. So it's sort of flipped from what we thought was going to be, these could be disastrous and they would impact, to actually these complement the super connecting hubs.
I don't think anyone wants to sit on a plane for 19 hours in economy. That's the other thing. I just don't think anyone wants to do it.
That's the challenge, isn't it? This is we thought we'd just drop this in out of interest. This from the latest Airbus market kind of overview, and it makes that point, that we sort of all were hanging on to, that the A321XLR would facilitate these kind of direct services on destinations where maybe there wasn't enough demand to fill a wide body. I wonder, though, to what extent what we're seeing at the moment is just really reflective of where we are in relation to who has the A321XLRs and how they're being deployed at the moment. We're kind of very early in the journey, and it's going to be interesting to see how how successful that is, and maybe it has a dual role. I think Indigo is one to watch, isn't it, in terms of how they deploy their narrow bodies, because let's not forget also that you've got, we're quite guilty, I think, with a sort of Western perspective around who wants to sit on a narrow body across the Atlantic. I have said that myself. Who wants to sit for 9 hours in an aircraft, a single aisle aircraft? If it's the first time you've travelled long haul, or the first time you're traveling outside your home country, you don't have an expectation about what that product looks like. And actually, if price is a more important driver than product, we can't underestimate, I think, the potential that comes from emerging markets where there isn't a sort of historic acceptance that seat pitch is important, or whatever, whatever the metric is. So yeah. Right, let's come back to, 3 minutes to go. I'm going to come back to one final slide, I think, which I'm just going to show you now. So what does the future hold? We've sort of alluded to it, haven't we? This was just a look at, if we look at current passenger volumes across these airports, we're sitting at 341 million passengers. If we then look at, and this is just taking a very sort of aspirational look at what's planned for these airports in terms of their master plans. They are planning for airport capacity, so not seats on planes, but the ability of the buildings to handle somewhere in the region of 845 million passengers, so more than double, I think 2.5 times where we are today. That feels like a massive shift. However, regional growth rates are forecast to be above 5% for the rest of this decade. And the projections that from a sort of range of sources, IATA, ACI, airport manufacturers, suggest that growth of 4% thereabouts in the next 20 years in the Middle East region is not unrealistic. That takes us there and beyond.
5%
by 2050.
Yeah, 5% growth per annum is a market doubling in 15 years.
Yeah.
So it's not unreasonable. It's just who is is it going to be evenly distributed, or are there still going to be some very clear market leaders? And I personally think there will be clear market leaders. I think it's going to be very hard to just remove or take away traffic from Dubai and Istanbul. Because of its very large domestic market in the first place, its linkages to Central Asia, and Dubai because it's got DWC coming, and that's going to be very, very powerful.
Andrew, some final thoughts from you? How do you think it's going to shape up?
I think the aviation market, anyone who tries to second guess the aviation market 10 years out is I'll take their money now.
Yeah.
I think I think this is probably, if you work in aviation, being in the Middle East is probably the most interesting market to work at in the moment. This is where the political ambition is. This is where the drive is. This is where the cash is. We're seeing really, really big changes, and it just continues to evolve. It's a fascinating place to be. One thing I would ask just before we log off is, there's been lots of questions along on the right hand side. Just an appeal, really, because anyone who's on this call on this will be interested in aviation. We've just built the beta for a dedicated AI Wilbur. A dedicated AI platform, aviation platform. I need people to test it for me. So if anybody's interested in testing an aviation AI beta, they could drop me a line on LinkedIn. They would be doing me a massive favor. It would be a big help.
Excellent.
I could do with artificial intelligence. I could do with any intelligence, so I might join that.
Yeah, I think we could all benefit from a bit of assistance.
We were trialing it yesterday, because you talk to it, you don't type it, you talk to it, and the answers it was giving back, I just had my head in my hands thinking, oh my God, we are all done. But no, it's a great system, and anyone who can give me a hand testing it for me would be a huge help.
That'd be wonderful. I can't wait for it to be in place, and then we can all go on.
Yeah. Okay. Well, listen, thank you, everybody. I'm conscious of time, so we'll wrap it up there for today. There's a bit more content than we had time for in the slide deck, so we'll get that circulated to everyone later today. And of course, if anyone has any questions, don't hesitate to get in touch with OAG on the details in the slide. Thanks all for listening and for your insightful and interesting questions. Thanks, of course, to our speakers for joining us and for sharing their views and insights so generously. Andrew, it's been a pleasure.
Thanks for having me.
And we will see you all on the next one. Thanks, everybody.
Thank you. Cheers. Bye.